Hello everyone, and welcome to Geopolitical Trends, where truth matters. Well, China no longer buys oil from the United States. How bad is this for the US energy market? Is this just the beginning? In this video, I am going to provide you with my own analysis about these developments and place it for you within the economic and geopolitical context. In recent years, China has strategically redirected its oil imports away from the United States, increasingly sourcing from the global south, particularly BRICS countries, among them Russia, Brazil, Iran, Saudi Arabia, and United Arab Emirates, among others. The significant transition aligns with China's broader geopolitical and economic objectives, aiming to secure a more diversified and resilient energy supply chain, while at the same time strengthening ties with emerging economies. This shift not only underscores China's quest for energy security, but also highlights its efforts to reduce dependency on the US supplies amidst escalating trade disputes and, of course, political tensions. So how does the geopolitical landscape look like? Well, the trade disputes and political tensions between China and the United States have made reliance on American oil more precarious. The US-China trade war, characterized by tariffs and sanctions, has underscored now the risk associated with dependency on US energy supplies. In response to this, China has sought to diversify its sources of oil imports, thereby reducing its vulnerability to any single supplier. This strategy ensures greater energy security and stability, which are critical for sustaining China's growing economy. Moreover, the US sanctions on various countries and firms involved in the oil trade can complicate transactions, prompting China to seek more stable and reliable partners in the global south. And since the US does not honor its agreements and commitments anymore, there is no telling when the US might flip on any given country, including allies or even China for that matter. For instance, sanctions on Iran and Venezuela, both significant oil producers, have led China now to look towards alternatives that includes Russia and other BRICS nations as more dependable sources of energy. The role of BRICS in China's energy strategy overall. Well, the BRICS countries play a pivotal role in China's new energy strategy. Russia, for instance, has become a crucial supplier of oil to China. Despite Western sanctions on Russia following its military operations in Ukraine, the energy trade between China and Russia has flourished. This relationship is mutually beneficial. On one hand, Russia gains a stable market for its oil. On the other hand, China secures a reliable source of energy, less susceptible to Western political pressures. Brazil and South Africa also contribute to this diversified energy portfolio. Brazil, with its vast offshore oil reserves, provide an alternative source of crude oil. South Africa, while not a major oil producer, offers a strategic partnership within the BRICS framework, enhancing China's access to various resources across the African continent. What are the economic implications of diversification, you may ask? Diversifying oil imports has significant economic implications for China. By sourcing oil from multiple countries, China mitigates the risks associated with supply disruptions. This diversification helps stabilize domestic oil prices, ensuring consistent energy availability for its industries and consumers. Moreover, Trade with the global south is often conducted in non-US dollars, further advancing the trend towards de-dollarization. Speaking of de-dollarization, it is a critical aspect of China's economic strategy. By conducting trade in currencies other than the US dollar, China reduces its exposure to exchange rates, fluctuations, and US financial sanctions. This shift could have significant implications for the US economy and its global hegemony, potentially weakening the US dollar dominance in international trade. What is the global impact of de-dollarization? Well, the move towards de-dollarization is not unique to China. It is a trend observed among several emerging economies. The use of alternative currencies in international trade diminishes the demand for US dollars, which can lead to a gradual erosion of the dollar's supremacy. For the US, this could mean reduced influence over global financial markets and a potential increase in borrowing costs as demand for dollar-denominated assets declines. Moreover, de-dollarization aligns with the broader objective of creating a more multipolar global financial system. By reducing reliance on the dollar, countries like China aim to foster a more balanced and equitable economic order, less dominated by any single nation. This shift is evident in various international forums where BRICS and other emerging economies advocate for reforms in global financial institutions. How about strategic partnership and future outlook? China's strategic shift in oil imports is part of a broader effort to build resilient and diversified economic partnership. The Belt and Road Initiative, known as BRI, for example, underscores China's commitment to enhancing connectivity and cooperation with countries across Asia, Africa, and Latin America. Through infrastructure, investments, and trade agreements, China aims to secure long-term access to vital resources, including oil, and rightly so. Looking ahead, this strategy is likely to continue shaping China's foreign policy and economic engagements. The focus on the global south and BRICS countries will further deepen as China seeks to strengthen its position in the global energy market. This approach not only supports China's energy security, but also reinforces its role as a key player in the evolving multipolar world order. Here is my conclusion for you, because I like to keep it short and concise. China's strategic shift in oil imports from the United States to global south, particularly BRICS countries, reflects its broader geopolitical and economic objectives. This move enhances China's energy security, reduces its dependence on US supplies, and advances the trend towards de-dollarization. By diversifying its sources of oil and fostering robust economic partnership, China aims to build a more resilient and stable energy supply chain. The implications of this shift are profound, both for China and the global economy. For China, it means greater stability and security in its energy supply, essential for sustaining its economic growth. For the global economy, this move signals a potential shift in the balance of power, challenging the dominance of the United States dollar and fostering a more multipolar financial system. As China continues to navigate the complexities of global energy markets, its strategy will likely influence international trade dynamics and reshape the geopolitical landscape. The future of global energy security and economic stability will increasingly depend on the interaction between major powers and emerging economies. This underscoring the importance of strategic diversification and resilient partnerships. If you like this video, please hit that like button and don't forget to subscribe. As always, remember, geopolitics impacts your daily life in more ways than one. Till next time. Thank you.